We have credit spreads widening a bit, some issues at sovereigns around the globe. We have the Sahm rule, unemployment here. I think we're all in this camp of just like, is there a policy mistake and do they over tighten? That's what we have to be aware of mostly right now, because that could cause a cascade in prices.
Hey everyone, this episode is brought to you by Avalanche. Everyone's favorite red coin is a fan of On the Margin, and we are a fan of Avalanche as well. Talked about it on the program before. Avalanche is a very cool solution. Their subnets allow for a very scalable blockchain that's also interoperable at the same time. And it's not just me. The institutions are noticing and they're building on the evergreen subnets as well. You're going to be hearing all about some of those institutions later in the episode. For now, Avalanche, thanks for making this possible.
All right, welcome back to another episode of On the Margin, Roundup edition. We got the quad back. What's going on, guys? How's it going?
Mike, how's your where were you?
I was in Montana. I was doing a little hike with the parents. Played some golf for Father's Day. Very classic. It's a nice wholesome week. I see you've got an Emery hat there, Quinn.
Yeah, I'm representing you and Yano.
Yeah, dude. I know. I was gonna say I haven't seen an Emery Eagle in a little while. It's a nice
Eagles.
sight to see.
Cross country.
Dude, Montana is great though. Every time I go out there, I'm like, I've got to be spending more time out here. Like the Mountain West it's so good. Yeah.
Every time Felix posts a picture like that, I pull up Google flights, and I'm like, don't make me do it.
I was gonna say, like, it's so important to me. Like, I'm very fortunate. Like, literally, I live so close to the mountains. I could just go up into the bike park there, like at 5 p.m. and just go do a few laps and just clear my head. But I don't know. It's really something, and it helps clear my head so much from just, being raging on the internet all day and on Twitter and just seeing everybody yell at each other. And it's just like, I just leave that and go do my thing. And it's good stuff.
Now my parents have, like, I grew up in Boston, so like we grew up in a city, and my parents,
dude.
Yeah, Boston.
Dude.
Yeah. R.I.P. Ben Affleck, who's getting dragged these days. But yeah, but now whenever my parents have been out in Montana for like 2 years, and whenever they come to New York, they're like, it's so loud. All these people. It's like, you guys just moved out there. Like you can't do that yet. It's not, you're not country bumpkins, but they listen to this podcast. So maybe I'm going to stop.
Just keep roasting them. This is a boomer roast session.
Yeah.
Nice to meet you, Mike's parents. That's
yeah. I was just gonna say, hey, Mike's parents.
All right.
Thanks for the invite to Montana. We're nice guys. You should let us come out.
I want to start by just chatting a bit about this whole slowdown thing. I've been talking about it for about a month ago, and we've had some back and forth. And I know, for example, Quinn sits on a bit of the other side of it, but there's this interesting chart that you posted in the chat this week, Quinn, of just looking at expectations for soft landing versus hard landing versus no landing. And it's a really interesting sentiment indication for me that basically all of like 2022, 2023, hard landing was, quite nearly the base case. And now we're getting to a point where, people are only putting like a 5% probability on a hard landing. And that comes at a time right where, in my opinion, the Fed is getting overly hawkish right as what feels like an economic slowdown that's been occurring. And, we flagged that a fair bit on the show over the past few weeks. And I've been having this feeling over the past few weeks, honestly, that it just feels like every economic print that comes in, it comes in soft. And, that just felt like a feeling to me, and I wanted to validate it. But just looking at like the Bloomberg US Economic Surprise Index, and that feeling is validated. We're seeing the most downside surprises since basically 2019, right before the previous recession. If you just like rewind back to that time, during 2019, there was a lot of slowdown indicators coming, and a lot of it got noisy because we had COVID, which caused obviously a huge different kind of recession, but all the classic signals were lining up for that classic recession economic slowdown to occur. So this was interesting to me. We had some home sales data came in yesterday that came in soft pretty consistently. We've been seeing the soft data. So now where my head is at is thinking, okay, is this just a little soft patch and then we see this reacceleration, or is it, the beginning of continuation further? And is this happening at a time right when the Fed decides that, okay, based on our dot plot, we only want to do one cut and we're going to be getting marginally more hawkish thereon? Paired with that is what's going on with the unemployment rate, where, as we talked about last week during the dot plot and summary of economic projections, their unemployment rate for year end is at 4%, which is basically where we're at now. So for their calculus and framework for easing has us basically not increasing the unemployment rate at a time where we're starting to see the soft patch. So that's what I've been thinking a lot about. I'll pass it to you, Quinn, and just hear. I know you have a slightly different take and more of the opinion that this is basically the beginning of a reversal and the end of this soft patch that we've been seeing.
Yeah, for sure. Go back to that FMS, the fund manager survey chart. These things are fantastic. And this is getting very non-technical. The only thing I would posit here is you're right that probably we've gotten a little too confident in the economic strength. And my whole stance has been, yes, we're slowing, but slowing from 8% nominal growth is not the same as slowing from 3 or 4. And, I just don't think with the rate of fiscal spending that you will get the same type. I think what you're more likely to get is back to the 2022 dichotomy of two-speed economy where, you're still spending and supporting the lower middle class. It actually has an inflationary impact. And for this chart, I'd kind of look to just the fact that no landing has gotten that high. Like I would think that soft landing, percentages increase or any landing at all, rather than it being recessionary hard landing. I still think that's kind of out of the question, just given how quick the Fed will be to the trigger. And the funny thing is since the last FOMC, which I believe was actually quite hawkish, the market's telling you, risk and equities are telling you they don't really care. There's been the dispersion trade, which we're going to talk about. We know there's winners and losers of higher for longer. And since then, the Fed, in multiple occasions, many of the speakers have now since come out, and they saw the market reaction, and they're fine. They're basically holding the stance that they need to see more progress on inflation, and with the caveat that they'll be quick to support if growth and jobs deteriorate. So I just think we're in this like recurring cycle of everyone gets too hawkish, higher for longer. Something happens. In this case, it's a growth scare. Rates come way down, and this just ultimately provides another boon for the housing market. Right? We saw long end, mortgage rates falling 40, 50 basis points in a month, and that's going to free up supply, free up things for construction and home building, and we're going to get another little stimulus here. So I'm a big fader of recession concerns.
I'm a little concerned on the global growth, but less on US growth. But if you have a global growth scare, like if there is something wrong in Asia or Europe, that can really flow through fast to, US earnings. And perhaps we're seeing some rumblings of that. And I'll go through a little bit of the charts later. But my concern is less, super recession here, unless there's like some sort of global unwind. I think Powell pivots really fast if there's any credit issues that start to roll.
Tyler, where are you seeing stuff in the rest of the world that's concerning you?
Yeah, the yen, I don't have a chart of the yen, but it's making new lows. It's 159.55, down another 40 basis points today versus the dollar. This is the European investment grade CDS. And essentially it's off the lows. It's still, low relative to other periods of credit stress, but definitely popped recently, which I think is why we saw a lot of the treasuries being bought in the US. So you had credit stress. This is investment grade credit stress in Europe. If you go to the next slide.
Wait, Tyler, do you not think that CDS buying was just people trying to hedge political risk in Europe? That's
totally.
Yeah,
I mean, that's probably part of it. Yeah. And we'll see if it's just a political thing or something worse. Last week we talked about the DAX breaking the 50, the Euro stocks breaking the 50-day moving average. So things are just getting a little bit more conservative there. Then this next slide, which is slide 9, this is Japanese CDS on investment grade, off the lows again. And this is like, let's put this in context. We were at record lows in credit spreads globally, and now they're just widening a little bit. And then if you go to the next one, this is US CDS on investment grade. So the higher these go, the more stress there is. So you can see the super spikes during COVID in 2020, during 2022, and then this is really off the lows, but it's something to pay attention to because we've seen capital concentrate in certain strategies, i.e., the dispersion trade or momentum. And when you see credit stress kind of like getting a little bit worse and global collateral kind of constricting, you can see spikes in volatility on the equity side of things, especially in a blackout period, which is this next like month or so. So that's sort of what I'm watching charts wise. If we want to go through the dispersion trade real quick, I don't know if you want to hit that now or later.
I think we should get into it because I think it does imply some potential fragility in the economic and market system. So yeah, would love for you to just unpack that and then we can bounce it around.
Well, there's they describe it better in this podcast on Odd Lots this week with Joe Weisdell, Tracy Alloway, and a couple of volatility guys. But essentially, what's been going on? We've been talking about the pile-in of momentum stocks. So go to slide 14. You can see this is the Goldman Sachs momentum basket. This, remember last week we talked about, this tech's getting a little bit weird here. Everyone was piling to semiconductors, and we talked about implied correlations hitting new lows. Now, they even hit lower lows this week. And so if you check out slide 13, this is implied correlation. It hit like 820, I think, on implied correlation. And that was basically the top of the semis bubble because all these quant strategies had been piling in. And what the dispersion trade essentially is, and I'm not like an expert in this anyway, like by any means, but you buy volatility in single stocks. So you buy buy calls in NVIDIA, and then you go out and short the Q's volatility. So short the index fall. And what that does is it kind of exacerbates any moves to the upside. And then, you stifle the volatility on the index side. And this trade has worked. This has been the main driver of everything. And below that, you have the buybacks that kind of stifle the volatility on the index as well. So it's worked incredibly well. And now you have a little credit stress, implied correlations are rising. This is tech specific. I'm not talking about, other asset classes, but this is where you got to be a little bit concerned that we're going to be in a little bit of a pocket, especially if the Fed is being hawkish. This could change tomorrow if he starts jawboning, easing again. But I'm in this beware. We're in a touchy period right now.
Hey everyone, this episode is brought to you by Avalanche. Avalanche is a leading network of blockchain which is giving access to some of the world's largest financial institutions to experiment and build on crypto rails. I'm a big fan of Avalanche. I've talked about it on this program before. The Subnet architecture leverages some of the best parts of IBC over in Cosmos, the interoperability protocol, and the rollups on Ethereum, with the result that if you're a financial institution, you can build on something that's highly interoperable, but also customizable and scalable. And it's not just me. Many of the largest institutions in the world are taking notice. And a couple examples of folks who are building on Evergreen subnets include Onyx by JP Morgan. They leverage an Evergreen subnet to explore how tokenization can revolutionize the asset and wealth management industry. Citi and the DTCC digital assets are testing private market tokenization on the Avalanche Spruce testnet with Wellington and Wisdom Tree. So again, some of the largest financial institutions in the entire world are building on Avalanche. Avalanche Evergreen provides a suite of institutional blockchain deployments, customizations, and tooling designed to address company-specific and industry-wide requirements for financial services. So join the institutional investors that are choosing Avalanche today. Go to avax.network/evergreen. Again, that's avax.network/evergreen and join the revolution. Avalanche, thanks very much for making this episode possible.
Yeah, it is pretty fragile. I a few days ago just nerded out and started reading a bit about how they build up this implied correlation index. And from my understanding, it's largely measuring the dispersion between correlation of the index and correlation of the stocks that make up the index. And when the correlations of the individual stocks get so idiosyncratic from the index itself, the correlation decreases between the index and the individual stocks. Do I have that right, Tyler?
Yeah, I think that's generally right.
And so what that's showing here is basically this, the implied correlation index isn't driving that dispersion trade. It's more so the dispersion trade is driving what's being represented in this correlation index. And then what that leads is this potential pocket that you're talking about where, because of, correlation drives everything. It's like when we go through these market crashes, correlations go to 1 and everything comes down. And in, portfolio management theory 101 is that, when you're building a portfolio, lower correlations provide you either, better diversification, and that gives you a better risk adjusted return, because your overall portfolio standard deviation comes lower. So all of that together is creating this pocket that you're concerned of. Am I getting that right?
Yeah. And, to talk about it more simply, like this is like super high derivative stuff that like I don't even know that, super well. But the way I've rationalized it is one of my old buddies at MIT, we talked about this years ago, and he basically said, when you have a really healthy marketplace, you have lots of different types of people with different types of incentives going to that marketplace and buying things for different reasons. That makes, I buy it for a reason. Felix buys it for a reason. Now what's happened is you've institutionalized the market so much quantitatively, and you've basically given up your ability to manage your own 401k, and you've allowed your pension to manage things. And they all have pooled into these like quantitative strategies. And so my concern is a homogeneous market, which is everyone's incentives are the same and everyone buys it for the same reason, sells it for the same reason. We can see movements in the market now. You see a tick higher in the dollar, everything goes, you can see every single tick happen in the marketplace on the single stock basis just off that. It's kind of nuts, and it shouldn't happen that way. It's a sign that things are too centralized. So I think there's a lot of people with the same incentives to get yield in the marketplace now that are all institutionalized. And it makes me nervous when you see like implied correlation so low, because it means all their incentives are basically on one side of the trade now. And you can see it unwind pretty viciously. You do have the Fed basically backstopping this all. So if it gets bad enough, they'll just ease. And then theoretically that pool of capital would move out of the Qs and go into smaller caps. So this isn't like draconian, but it's something that like is definitely kind of concerning in the marketplace. Hopefully I explained that well. But the main premise is like, if I went to the meat market and I went to go buy something, and I'd look at a piece of meat, and you'd look at another piece of meat and be like, what, I want a smaller piece of meat and I want a bigger piece of meat. And there's all these different incentives going on. Now all these stupid quantitative things are basically computing the same data and buying the same shit and selling the same shit based off of all these centralized things. And it's going to end up really badly. Like this shouldn't be this concentrated. It's monopolistic type. I call it systematic communism, because communism centralizes, right? And it's no surprise that Niall Ferguson comes out and is like, we have a lot of similarities with the Soviet Union now, like from the Cold War. Our systems are set up very similarly. A gerontocracy, a lot of power is controlled. Like these things are very interrelated, especially the market structure. So anyway, that's my rant for today. we'll let you pivot and go to something else.
Tyler's tirades.
Yeah.
It's an interesting observation that communism is centralizing. I agree with that. It's zooming out of even markets in general. The reason I think you have to put like an authoritarian figure in the middle of communist regimes is because communism doesn't support natural human incentives. So in order for you to get everyone operating in the way that communism wants you to operate, you need like a deus ex machina to force you to do that. That's why at the center of every communism for the people regime is an autocratic dictator making it all work, because otherwise it wouldn't work. And it's maybe there's an analogy to be made with markets there, but yeah, I thought that was an interesting comparison, Tyler.
I want to talk about the dispersion thing, but a little on a maybe more positive tone. And speaking of communism, if you guys haven't watched The Boys in the Boat, the movie about the Washington rowing team going to the Olympics and winning in Berlin, you should do it. It's a good. I like good vibes things in movies, so that one will get you pumped up. But the dispersion thing. So actually, Jem Carson has been by far and away the preeminent guy on this topic. He's in the options vol world where all of this takes place. And the best explanation that I think that he gives is you have the S&P 500 of 500 companies, and everybody trades those stocks. And then you have the SPY, which is, one of the largest ETFs in the world. And there's index futures, index options products as well. And so what this passive world has resorted to is, which Tyler's, all your observations are correct. And it's resorted to most people trading the indices versus individual stocks. And so you get these large amounts of flows into the index level, but then you have these other factors that change which companies within the index do better. So for example, tons of buying pressure in the S&P 500 index, but let's say oil prices are going to $90 and you have, a kind of pinned index. And if oil prices are going to 90 and the oil and energy and commodity stocks are going up, but the index isn't moving, somebody else by definition has to go down. And that's where you've been seeing, tech get hit in those cases. Or recently when oil and rates have come down and, the index is here, those come down, that performance has to go somewhere else. And it kind of roofs the Mag 7 that we've seen. So in and of itself, it doesn't have to mean a negative thing. It's not a good sign, right? The lows in dispersion usually indicate we're getting closer to a market peak, but it's not what is the end, right? So I think that's the important thing to remember. And what I've been struggling with this for a number of weeks, and I actually am starting to see some signals that, everybody's been talking about the broadening out, like when will small caps get the bid? When will energy get the bid? There's talk of a popular trade on Wall Street has been short energy as your funding leg to long more tech and Mag 7. And, for the longest time, I'm like, how could this unwind? If Mag 7 is 40% of the S&P, how can this unwind without bringing the index terribly lower and, a correlation to one end of the dispersion thing? And it's kind of becoming more apparent to me that, one, everyone's and their brothers talking about this dispersion trade, which tells me it's probably not the top. And then, throw in NVIDIA too, right? Everybody and their brothers talking about, is this the NVIDIA top? It's probably not, because everyone's talking about it. And so what you're seeing now is these last couple of days where we've seen tech and NVIDIA weakness, small caps, Russell, Dow Jones, equal weight S&P have all shown relative strength. And so what that tells me is we've had rates come down. People aren't really scared about inflation for a while. Oil strengthening. I'm seeing these signs that the economy is fine. Even like consumer discretionary has been pretty strong, XOY index. And yet we're seeing that correction in tech. So I actually think that dispersion can continue, but in the other direction where, S&P kind of still muddles higher, tech, kind of takes the back seat, and you see the rest of the trade, the other sectors that have been left for dead, come back. And that's actually a really positive thing for crypto. My good buddy Ram Aluwalia had an awesome thread how everyone's kind of dumping everything for NVIDIA and semiconductors, which you can really see in the price action. And if that reverses, I actually think that's a pretty positive backdrop, because if my view is correct that the economy is fine and this growth scare is just a blip, you're going to see some capital want to go back out to those sectors that have been gotten hit because of this growth scare. And small caps is one, cyclicals, energy, industrials, and I put crypto in that bucket. So it's a really interesting, time in the market. But I kind of starting to see the early signs of what I didn't think was possible in a healthy broadening out. I actually think with these growth scares going away, that might happen. And the market's also telling you that the Fed's probably going to cut in September or maybe sooner. Like some of this unemployment data weakening, everybody's, I'm starting to see a more obvious path for accommodation than I did say 2 weeks ago. And so that kind of boils into it as well, I think.
I think I largely agree with a lot of that. This is actually something I wrote about yesterday in the on the margin newsletter. Which, quick plug, we have a daily newsletter now that comes out Monday to Friday. I write on it Tuesdays and Thursdays. Go sign up. But yesterday I wrote a bit about the surface level part of the dispersion trade, but part of it being about this run up in tech and NVIDIA and all of that. And NVIDIA, I know I was supposed to say it, not NVIDIA, just feels better to say NVIDIA.
That's a sign of the top. That's a sign of the top.
Sign of the top. I know how to say it now.
You're saying it right.
What if a lot of this, change has been fundamental driven? I mean, there's you look at like where the upward revisions in EPS growth has been. It's been in tech, and the big question I ask myself every day, like when I wake up, is are we more online than we were the day before, or the week before, or the month, year before, or a year before? And I think generally speaking, the answer to that is yes. That's where the growth is in terms of the economy and especially the US economy. It's all in tech and AI and all of that stuff. So if that is true, it makes sense for me to see this further narrowing of market breadth into these companies. And it gets back to this whole thing you're talking about, Tyler, about like systematic communism. I mean, maybe people like the Unabomber had a point talking about how technology is like this like technocratic narrowing of society into these like technocratic companies that just control and just get bigger and bigger and bigger and bigger endlessly. So if that is all true, then this is a pretty rational rally. So I mean, yes, there could be these, tying it back to what you're talking about, Quinn, about passing the baton for market breadth to these more classic parts of the economy like consumer staples. I think that can happen for a bit, but I think if you just look at the trend for the past 10 years, it's been this endless cycle of everybody, yelling about market breadth getting too narrow because, last time it was Apple, this time it's NVIDIA. And then you get a short little rotation into the more value plays. I mean, just look at the friggin' value investors versus the growth investors. They've been underperforming for almost 20 years now compared to growth. I mean, eventually you got to rethink your priors and think maybe it's just the economy is fundamentally changing. So to me, that all sets up a pretty rational reason. I don't think it's just like total, exuberance here. I think there's a pretty rational, reasoning behind this rally.
I agree with that. Like there's clear earnings growth. There's clearly something going on, massive CapEx spend from the big tech companies. I just think that at this point, that concentration is just way too high. Like who's the incremental buyer at this point? And especially when you have weird things happening. I wanted to bring up the Norinchukin Bank in Japan. Have you guys heard about this? You can say that 10 times fast. Norinchukin.
I'm not going to try that.
All right.
We have our pronunciation expert laying the deets here.
Japan is the king of centralization. And because they've basically, centralized their entire economy. Norinchukin is part of JA Bank. JA Bank is the Japanese agricultural cooperative and fishery. Like they take care of a lot of the farmers and fishermen. They have 10% of the deposits in Japan in JA Bank. Now, Norinchukin came out this week and said they have unrealized losses. If you go to the next slide, on their bond portfolio, not their CLO portfolio, but their bond portfolio. You can see it down there. They basically said they're overly exposed to sovereign bonds and is liquidating some of their portfolio and realizing the loss. They're selling 1/3 of their bond portfolio, which is 63 billion of USD in euro and US treasuries over the next year or so. And to me, I don't think this, the problem has more to do with giant sovereigns have kept funding costs down for large monopoly type tech companies. And now I think that's probably starting to reverse here, if that makes sense. So the cost, it's just an arbitrage of cost of capital, where the higher the rates, the larger the monopoly type tech companies can, dominate. And now you have a reversal in Japan where now they have to sell their sovereign bonds unless the Fed comes out and starts lowering rates. That's the cap.
Do you know why they have to sell them? Because if they hold them to maturity, they're going to mature at par and that loss is gone. So do you know what is forcing them to actually have to sell before then?
Probably liabilities. They have to pay out
Yeah.
pensions. Like this is fishermen and
Right.
farmers pension. So like as especially, as the yen keeps weakening and weakening and the dollar causes that constriction of dollar liquidity. So go to slide 15. This is why you have reason to be bearish here in this the interim, but I still longer term we're in a vol controller world that's centralized, and I think they come and stomp this out. But check this out. This is a really fascinating chart. The Asia dollar index is the orange line. Now that's basically, if that breaks 90, we're in sort of an Asian currency crisis type situation, which is why I think you're seeing these Norunjuken Bank things. I've circled on the bottom part. When you see the Asian dollar really kind of collapse, it happened in 2018 when the S&P took a digger. It happened in 2020 during COVID when the S&P took a digger. And then 2022, both times the Asian dollar kind of fell, the S&P took a digger. And then, a drawdown in 2023, which was kind of shallow. But the point is now we're super extended on the S&P, where I think this is 1998, all the Asian economies and European economy piled into US assets, US stocks. This feels like the blow off top in the centralized world to me. We could have longer to go. But when you get the Fed easing, I do believe that's going to rotate into IWM, like in the Russell 2000. Like I think you're going to move from a centralized world to a decentralized world. And there's lots of other macro indicators to signify this. Like to go back to the politics, like there's centralization, and Trump wants to make a weak dollar. He wants to reindustrialize and decentralize the world. So it's not just China, providing the manufacturing of the world. It wants to be competitive in that and put tariffs on things. So I don't necessarily think this is going to be, it might be World War III, but, we have a way to out of this where you could decentralize things and have a weak dollar policy, reindustrialize America is sort of what I'm saying. Does that make sense?
Hello, listeners of On the Margin. I've got good news for those of you who are in the crypto scene. Blockworks is bringing back permissionless. We're going to be doing permissionless 3, and this year we are heading west. So we're moving that out to Salt Lake City. That's going to be October 9th through 11th this year. We've got a phenomenal lineup of speakers for you. So we've got Balaji headlining. We've got Sriram Munib, Matt Hogan of Bitwise, Jan Van Eck. This one's going to be a blast, guys. And I saw many of you out in London for DAS this year, and I hope to see you out in Salt Lake for permissionless. And because y'all are such faithful listeners, we've got, if you use code MARGIN10, you're going to get 10% off your tickets. Appreciate you all. Hope to see you out there. I've got a question for you guys on that note. This is something that we talked about a couple episodes ago. So I saw these proposals coming out from, and by the way, I think these are just high level proposals that I'm not really sure how he actually feels, but there was this report that Trump was proposing eliminating an income tax, obviously something that would be very well received here. But then the way he was going to pay for that was with tariffs. And I'm just curious, obviously that's not going to happen, but I would be curious just almost to game that out, like how you guys see that going. And the reason I think it's interesting to think through some of these hypotheticals is I just do think a lot of what's going to be moving the needle is politics, and like populist politics recently. I don't know if you guys saw what's going on in France at all, but Macron is dissolving the National Assembly, calling for a snap vote because Le Pen is running his show. And I don't know. I'm not French. I don't really pay attention to this that much. I do know that he raised the retirement age, 2 years. So it's only 45 over there in France. Haha, just kidding. We'll knock it all the French. But I mean, Le Pen's father was literally a Nazi. So, it's getting relatively extreme, and populism does do some good for the people things. Like it breaks down these like broken institutions. It hastens that, but it's also, you get kind of silly things as well. So I think it's not a silly exercise to actually run through like, what would it look like if, I'm just curious how you guys would think through no income tax, but tariffs in the US. Like if we move towards, let's just say lower income tax and higher amounts of tariffs, which it actually does feel like we're heading towards. Like, what do you guys think the impact of that would be?
both of those things by themselves are extremely inflationary because lower taxes is higher deficits by, all else equal, assuming you don't constrain your spending because it's less revenue. So higher deficit, that's inflationary. And tariffs are inflationary. It's using protectionism and sacrificing higher prices of goods for other means. And he talks about the other political reasons you would use tariffs. And there is some truth to that, right? Like reciprocality and, protecting domestic industry. These are time old, just historical reasons to use tariffs or why politicians have used tariffs. Both of them are very inflationary. And I think back to Tyler's points that I just want to touch on too around the Asian currencies is we're starting to see once again what we had been talking about for a number of weeks now, which I kind of define as the shot clock on the Fed, which is global central banks are easing, the economies are weakening. There's, can go down a rabbit hole why I think that is. But the fact of the matter is the divergence in monetary policy sooner or later is going to cause problems. A big signal I found this week, and maybe it's nothing, it could be nothing, but it was interesting, was the huge pop in gold, I think it was yesterday or 2 days ago, on seemingly no news and no really other action. It was on a day when the dollar was up and yields were up. But then I checked the global currency charts and you see, once again, the yen imploding, Asian currencies imploding. And stocks unbothered, crypto doing its thing. And I'm thinking, this is kind of setting up for the bull case again. Like, the market is kind of nonchalant about it because I think everybody knows, and that's one of the reasons I'm starting to see a more clear path to Fed accommodation, is because that shot clock is just the heat's turning up week by week. Every time yen goes 159, 160, 161, those calls become more frequent of the BOJ and the ECB to Powell's desk. And eventually that's going to cause problems if they don't deal. And I think everybody here knows that. They kind of, around the May FOMC, they coordinated some action and it temporarily worked. So I think they're just kind of buying time. And ultimately gold might be sniffing that out, right, sooner than other assets. And I think the fact of the matter, to your points, Mike, on those two potential outcomes with the Trump presidency, I think they do become more real the closer we get to the election. And the only way to solve that is weaken the dollar, because you have to print. That means larger deficits, higher inflation, and you have to weaken the dollar to monetize those deficits.
So I was just trying to unite even just a very simple understanding of what might be going on in markets right now, which is it might not just be one thing, right? It's the confluence of a bunch of different factors, which is maybe it's rational, Felix, to your point about NVIDIA and AI in general, but obviously a huge amount of enthusiasm around AI, right? That's what's driving new venture deals. That's what's driving returns in public markets. It's it's the Mag 7, but it's really NVIDIA is now the most valuable company in the world, I believe. Congratulations to Jensen.
He's selling the stock, by the way.
I mean, wouldn't you? Wouldn't you? I don't know. That's the whole point.
Yeah.
What's the point of creating those valuable company if you don't sell the stock?
Tony Greer has a good line. If you're signing chests with one hand, you better be dumping the stock with the other.
Yeah.
I love that.
So, but then the other two things are, unemployment is turning, but we know that that's the most lagging indicator of all of this. And the Fed watches that and they pay a lot of attention to it. And they don't try to forward anticipate things. You hear a lot of these traders on podcasts and why isn't the Fed anticipating where the market's going? And that's just not how the institution works. They have to wait until they see data, but unemployment is moving in the wrong direction for the Fed. And we're probably at some sort of breaking point in terms of how long they can keep rates for this. We're pretty deep into a rate hike cycle at this point as well. And then there's just the dollar. So I don't know. I guess what I'm loosely sort of 40 IQ take is that there's like a couple more months of this, and then it just feels like the dollar rolls over, unemployment moves in the other direction, which gives the Fed the green light to cut. And it's a freaking election cycle. So that just feels like what's going to happen.
Yeah, I agree, Mike. And I think to your point about looking at unemployment, I think the Sahm rule is going to be something that we hear a lot about over the next few months. What this is Claudia Sahm, who was an economist at the Fed. I believe she doesn't work there anymore, but she came up with the Sahm rule, which basically just looks at the unemployment rate. And when the unemployment rate gets over, I believe, the 30-day moving average, which basically right now it's printing at 0.37. And when it prints at 0.5, which would be where that moving average hits in the unemployment rate, basically every time that occurs, we get a recession. So that becomes the Sahm rule. And it's something that is pretty well fundamentally agreed upon within the Fed. So I guarantee, they've learned the lesson about how, lagged unemployment rates are. And that if you wait till like 5% unemployment rate to ease, that's how you get a hard landing. So we're getting really close to this happening. You can see on this chart here of the real-time Sahm rule. If you go in here, I'll try to get nice and closer. So you can see like April 2023, we had 0 basis points. Right now, like last October, we hit 0.33. We're hitting 0.37 right now. So we're 13 basis points away from that 0.5 level. If that hits, I think, we're going to start to see that growth scare idea accelerate. And I think that could set the stage for some Fed easing. So I totally agree. I think this is coming up really soon. And I think this is something that a lot of people we're going to start to hear about this more, I think, as we start to see the reflexivity in unemployment rates, because it has a high momentum, baked into it, where once it goes, it really goes in cascades.
Just to recap, love that CFA breakdown. Like, man, you paid for that thing.
There you go. I paid big bucks for that. Yeah. I was about to pull up some tariff charts too of Economics 101 to pull that out and look at where consumer surplus is, but we could do that in a bit.
That's so good. But so just a recap. So we have credit spreads widening a bit, some issues at sovereigns around the globe. We have the Sahm rule, unemployment here. I think we're all in this camp of just like, is there a policy mistake and do they over tighten? That's what we have to be aware of mostly right now, because that could cause a cascade in prices. And if not, and they actually are like watching all this data and talking to the BOJ, and markets are a political decision, which I think in the end they are, and they weaken the dollar, we could be in for a rip roaring pivot and Bitcoin going to new highs. That's sort of, I think, to recap for viewers, we're tactically bearish, long-term bullish in a liquidity cycle, and we're all kind of in the same boat, which is not a good thing.
Okay, I've got an exercise for you guys. Here's something I was thinking about last night, because I was thinking through this question of I actually watched the All In interview with Trump, and he was talking about some of these policies about higher tariffs and lower taxes, and I was thinking to myself, those are inflationary. Like, I agree with your take, Twin. I was like, those are inflation policies that you're describing, and I then thought, like, here's something that everyone believes, right, to be true, which is a Trump presidency would be extremely bullish for asset prices, right? Like just like it was in 2020, baby, or 2016, like market just rips higher, all of this stuff. Could you construct a bear case for asset prices for a Trump presidency?
You forget, he talked about something right after that, which was we need to double our electric capacity with nuclear power. Mm-hmm. And we also need to drill, baby, drill. We're the number one exporter of oil, which could keep a lid on inflation. But here's the caveat, is like, we're in such a desperate deficit situation. Can he thread that needle is the question I think you're asking, right? Can we pump enough oil? Can we create enough, energy where the inflation doesn't hit so hard?
I was going to say AI, actually, as a like self-proclaimed person in the middle of the mid-curve here on like NVIDIA being like, it's close to the top. But like AI actually, I think is also going to be a factor here long term. Like it does. I mean, I really do believe it's like the mother of all deflationary technologies. Like it is crazy. And once people figure out how to turn all of this capex into real productivity gains in companies, like it's going to have a huge impact on people, I think.
I totally agree. While we've circled back onto this topic of Trump and that interview and all of that, you mentioned earlier, Mike, about just gaming out this idea of tariffs replacing income taxes. And I think it's a really interesting idea. And I'm just going to, go back into the pure theory CFA type friggin' talk again. But like, this is how tariffs work from an economic standpoint, is like you look at where the prices were before the tariffs and where they come in after. And what happens is between that, you get basically like tariffs are revenue for government, which is, different from the other side of the equation. I'll say like exports, which just increase prices. So they get a revenue. So that covers that income tax. But you do also get this general loss in welfare, which you see in like, the B and the D components. Producers get a surplus after that tariff. But overall, basically the calculus between the income tax, losing the income tax versus, replacing it by tariffs is, yes, the government does earn some decent revenue from it, but you do get this general decrease in, I would argue, efficiency and welfare. So I think it's an interesting idea, but taken to its extreme like that, I don't really see it working. But then again, I mean, income taxes are only like 100 years old. And we feel like that is just something that is just so tried and true and something that could never be replaced. But I mean, governments did operate in a world where those didn't exist. So maybe there's ways, but to me, it feels like that's just more so like an election. Oh yeah, we're going to do this. But generally on the margin, I feel like, taxes will go lower and tariffs will increase. And on the margin, that's the shit.
On the margin.
The highest level, Trump is, I think, cementing his landslide route victory for November with all these interviews. Like the tale two worlds between what Biden is doing right now and him. I've never seen him act more presidential. In that interview, he went probably the deepest on real topics I've ever heard him go. An example is on that topic of energy independence. He specifically noted that despite the Biden and Edmund being against oil, they actually have allowed drilling to continue. He was spot on about all this. They know they need that to stop inflation, but they've hated it every step of the way. Releasing the SPR in bulk versus letting more, opening up the Keystone and letting more, land being used for exploration is a perfect example. But the bear case for Trump's presidency, and again, I think at the end of the day, who wins is a little changes the path. I don't think it really changes, the long run outcome here. And the bear case for Trump is an accelerated second wave of inflation, really, because he's going to be bullish growth. He's going to be bullish demand. He's going to be fiscally, run deficits. And, he's likely going to try and pressure the short-term rate. And ultimately, what happens in his first, let's say, year of the presidency, can he pump enough oil? Can the uranium plants come online enough? All these things to be deflationary. They're all that set in stone before he takes the oath in January. And, so there's the supply crunch on that front. And if you stoke demand too quickly, too heavily, that's where you kind of ultimately see a problem. And there's growth benefits, right? So if inflation is high, but growth is high, okay, it can be good for stocks. It can be broadly all right. If inflation is high and accelerating and growth is slowing and the Fed has to do something to combat that, you have more problems. So I think really that's where I see the bear case. But it's interesting because you have all these components. You have trading up to the election, which is anticipation of what each policy is going to, which each winner would do in policy. And it's all kind of narrative driven, right? It's someone's going to be good for green and others are going to be good for oil and stuff. But then you have trading the election outcome, which might be like the blow off top to the narratives. And then you have, say a couple months after the election, the reality sinks in that really the macro is the macro, and neither of the presidents probably change all that much.
Yeah, I mean, the stage is set around deficits, like no matter who gets elected.
This is the thing that Tyler always talks about, which is like, this is Tyler, you're like labor to, like, let's say you're right about this like shift from capital to labor. Let's say that like all of these politicians that are getting elected are populist because there's been huge swaths of like the country and like middle class, like working class people that have been ignored, right? So what do those people want? Those people want their income to normalize relative to assets. Like I've been thinking more about that recently. Like that is, it's. I mean, that's what has to happen here. Right? I think like a lot of the stuff that people are unhappy about in the U.S. is less about bread costing $10 versus $7. It's more like I can't buy a house, and so how do you fix that? You have to normalize income relative to assets. It's not super bullish for assets in the long run. I don't really see the point, like how we get from point A to point B, but like I think that's the end game is like how we have to normalize. And yeah,
it's really bad for duration assets, short duration assets, gold, oil, commodities, energy. You know, these are cash is coming day one. That's why it's short duration versus tech, long duration.
Where do you think, so Bitcoin is really interesting in that bucket. Where do you think Bitcoin is in that bucket?
That's when it turns into a store of value.
Yeah, I think so too.
We're getting close, guys. This is the bull case.
We're close for sure.
We're getting close.
Policy is going to be like in this next wave of 30 years of investment, policy is actually going to be way more important. And it's not going to be this quantitative nonsense. It's going to be like, we need nuclear power. We're going to incentivize these companies. We need crypto innovation. We're going to incentivize these companies. It's going to be very thematic. And that's something that is just not in the quantitative nonsense anymore. But here's a chart I was going to show on the capital to labor. Niall Ferguson posted this today. And I've been taking like tutoring lessons from a guy named Michael Millerman. He's a political philosophy. He's a philosophical professor. Highly recommend if you can do it. Awesome. But one of his favorite lines is, how come our intellectual elites are moral illiterates? And I think about this chart. This is the Ivy Leaguers versus voters, the great divide that Niall Ferguson posted up. And I'm just going to roast your Ivy League viewers. My dad was an Ivy Leaguer, so I can roast him too, just so you know, this isn't like personal. But like Ivy Leaguers, personal finance is getting better, 90%. Is everything on this chart. Does the U.S. provide too much individual feeding? Yes. Voters say,
oh my God.
Like everything this is capital. This is the blow off top of capital, where like you basically, your cognitive elites have centralized things so much that they don't realize the social contract is breaking. And this just drives me crazy. Is like, you have to have a balanced economy. You can't just control everything or there's going to be a civil war. And that's globally too. If you probably did this in Europe, you'd probably get the same result. But it's just the capital to labor is going to be so huge. And I just don't, it can really resolve beautifully if you incentivize innovation and you incentivize reindustrialization. But you can also have it like devolve if you have a weak leader or like some Hitler type sycophant, sick demagogue. Then that's bad. But like, we've done it before in the US. We can do it again.
The silent majority is sort of a meme, but it's a real thing. And this chart is the silent majority versus who controls the media, who controls the financial system, who controls politics, who controls the government. And you have to be extremely biased or just looking the other direction to see what just happened in Europe. This is going to translate one for one completely into what's going to happen in November. Trump is going to landslide. And I think instead of the market saying, up until now, the markets have said, oh, this has been a Trump bump priced in. These sectors have done well. These sectors have hurt, Trump's odds, Biden's odds. We're going to move to Trump's going to win. How big is he going to win? Is he going to win by 10 points? Is he going to win by 2 points? And it's becoming very clear. And this is bullish for growth and stocks. This is bullish for crypto. But getting to that point about the correlations here, And a commonly discussed topic on crypto Twitter is, wow, NASDAQ's at all-time highs and Bitcoin and crypto is puking. Wait till that rolls over. Unfortunately, or fortunately, actually, I think personally, everyone's wrong on that. And it has to do with this dispersion thing. It has to do with some other things. But the positive long term is, we talked about this, the ultimate goal for Bitcoin is it trades more like gold, not like the NASDAQ, right? Then that's a real store of value. And we're starting to see that. I tweeted a chart earlier this week about the Bitcoin and NASDAQ correlation. It's kind of at highs, or it was when I tweeted, and I said, I expect one of these where the Bitcoin and NASDAQ correlation to kind of plummet. And I was also, that was amidst my bearish alt tweets that happened to go viral. So everyone thought that it meant NASDAQ keep going up and crypto crashing more. And actually, I've noted it's a 4 to 6 week view. I'm actually getting very constructive on crypto here. And I think, less strong of what the NASDAQ does, but I do see a decoupling there to the upside for crypto as you get a rotation out of just NVIDIA into other things now that the economy is probably fine and accommodation is coming.
I mean, man, all this stuff is just such like, I don't know. I still believe in the fourth turning. I know like there's people talking about it not being like, it's not statistically sound, there's not a regression on the idea of it or whatever, but like, I don't know, it's there. I mean, you just boil it down to something as simple as like Maslow's hierarchy of needs. Is that like when you can't afford a house, when I was at the grocery store yesterday and I swear to God, butter has doubled in price. I'm like, are you kidding me right now? Like, if that is what is like aggravating the average person, they don't have time to be talking about these, aspirational ideas. I mean, a lot of this political stuff is happening here in Canada too right now. Like 72% of Canadians want Justin Trudeau out, which is a crazy stat. He's hitting all-time lows in polling right now. Our election's about a year away. And when you look at like policy priorities, 5 years ago, everybody cared about climate change and green transitions and those sort of ideas. Social equality and all of that. Those are all in the downtrend, and just basic necessities of life are on an uptrend. So then when you compare what's happening there with that chart that you just showed, Tyler, of the Ivy Leaguers, I don't think it's a coincidence that they're also the same ones that are setting up encampments on the universities and protesting, is because they live in this world where their cash is earning 5% every year and they're just hanging out and they're killing it. They have time to be thinking about a country across the world because they can afford life, and there's a whole other part of the society that cannot right now.
Do you ever read Rob Henderson? He calls them luxury beliefs.
No, I love that though. Luxury beliefs. Yeah.
He's this guy who grew up kind of in the hood, got out, he had a foster parents who bounced around foster homes, et cetera. And he basically talks about how all the policies that the elites make, it ends up hurting those the most. Mike Ippolito talks about this a lot. It's like, it ends up hurting those people the most. And it's all for like this virtue signaling type thing. And I think he had 2 lesbian moms. Like he's in all the things that you thought would create like a super liberal, he's like super conservative, because all the things that the left has done is actually hurt the very people they try to help. And that's just like fascinating about government in general. But the luxury beliefs thing is really fascinating. And I think with media changing, like going to podcasts and getting real good conversations over longer term, not just sound bites, the model has changed where like the viewers are becoming like more intellectual. They're asking better questions. And I think that's why, a lot of politics are changing more than just like this brainwashing machine of the mainstream media. I don't know what you guys think about that.
I think that honestly, in general, like I think that politics tends to swing too much one way or the other. Like it was probably way too like left leaning the last couple of years. Like I can feel it swinging the other way. Like I think generally people are like well intentioned. Like I've always resisted this idea of like a big centralized entity like at the top down, like dictating everyone. I think everyone's like kind of responding to their own incentives and ideas. Like that's always what I've sort of believed about this. But yeah, I do think that like we need to seriously rethink policies, and like we just need like a sense of national unity. Like I'm just looking for a young politician to like, I would love for, instead of people tearing stuff down, like a positive reaffirmation of the shit that I care about, which is how can I better my own life and the life of people around me that I love? Like that's what I really care about. I'm much more on like the basic necessity train. And I do think that government needs to be a part of the solution here. Like I don't really know how to solve this this challenge that government has, where I think they again are kind of well intentioned, but then they step in and they muck it up. Like they've just been mucking it up in crypto. They've been mucking it up with the cost of higher education and healthcare. You know, one of the reasons why we have such shitty food in the U.S. is because of corn subsidies. Like they muck that up too. It's basically.
Did you guys know that milk in the U.S. would be illegal here in Canada for some of the things you guys put in it?
Yes. Yeah, because
crazy.
we pasteurize everything. We pasteurize everything, which makes no sense. And it's pretty frustrating when you think about it. Actually, the food thing, I wonder if everyone can get behind, because even if you like shop at all these expensive places and get everything organic, you're still eating poison every single day. Like
it's another centralized thing. There's like 4 food companies. I think to your point, I think government needs to go in and just like break apart like these monopolies. Monopolies are not good. They have just giant bureaucratic people that like make bad decisions.
Yeah.
The S&P has shrunk and the Russell has shrunk massively. And that's not good. Like you should have a growing capital market space, especially for the market caps we have, right? And the innovation's not happening. So I don't know. To your point, I've make a comment on Felix saying milk. I say milk.
Milk. I already know what Quinn says.
Milk. He says milk too.
I say milk, but I know all my Midwestern homies say milk. I have that. Or pop and soda and Coke. And, yeah, that's a good one too.
Sneakers.
I have a hot take. It's a pretty bold one that it's not super high conviction, but it's fun to throw out and can't wait to see people's comments about it. Is you talked about these populism periods. We've talked about that. We talked about there can be pivotal points, right? Countries divided. It's in Europe. You know, depending what type of leader arises from the populism can change things. It largely doesn't over time, but it can. You know, if you get a Hitler through populism, that's not good. If you get, you know, maybe a Reagan or someone else, you know, exactly. Millet. So I have a hot take that Trump actually is going to be the most, what's the opposite of divisive? You know, unifying president we've had in this next term. One, the hot take is that he's going to win by a landslide. So that might be a hot take. And people who hate him probably, I've already lost. But hear me out, is this guy's about legacy. He's not about, you know, he's a billionaire. He's not like, why would you put yourself through this again? He wants to go out on a high note. I think he makes, you know, he's looking to protect American interests. I think, you know, he's already coming to the table. He's not that conservative, right? Like we've seen him change his mind on, you know, women's health issues. We've seen him change his mind on a number of things. He talked about, you know, after we need the postgraduate, you know, immigration policy improved. We need other things like that. We need uranium, green. Of course we need that. And we've already seen it. Like we're seeing the shift, right? It's the early stages. When you said Trump's last name in 2016 or 2020, you were kicked out of Manhattan and never allowed back in. Now it's a different story. I think he's unifying it. We're seeing it with the all-in people. We're seeing it. He's on Logan Paul. He's got the young people. He's got the old people. He's got, you know, the boomers. He's got the, you know, African Americans. He's got the Cubans in Florida. I think he's going to be all in legacy mode. And I think he's going to be extremely unifying and has the potential to actually, you know, leave a really, really positive taste in people's mouths. And that's kind of what I expect. We'll see. But I also think like foreign policy, you know, making deals with other powers in the world to get better deals for the US. I think that stuff is going to become top of mind. And That's my take. And, sticking
That's
to
an
it.
interesting. I can tell you my reaction to hearing that, Quinn, is first I felt pretty weird. Like, so I think that's great that's a hot take. I think it is a hot take. But again, like I'm thinking through as you're talking, I'm like, okay, why do I feel like this? Like, what sort of priors are built in around this whole thing? Because like my background is back in 2016. I was in that camp of like Trump's a terrible person, and I still think in a lot of ways he is. But I also think that there's been a lot of priors built into me that make me have that knee-jerk reaction when you say something like that. And so that's interesting. And, I think we can all hope for a more unifying president. And so I hope you're right. But it's just interesting the way that I inherently reacted to that, for sure.
You know what? Not to switch on to RFK, but like, I don't disagree with a lot of that, what that guy says once you actually listen to him. Like, I think most people don't actually listen to him. And the fact that he's not even going to get a chance on the debate stage, I think is a pretty sad case for America. So the only thing that makes me a little fishy about Trump is the fact that he doesn't want to debate RFK rather than Biden. And that I'm just like, that's, I don't love that, but I
don't fault him for it though. Like, everybody knows RFK doesn't stand a chance. The Dems won't back him. Like, the Dems are the ones at fault here, not Trump. Like, if the Dems backed RFK, Trump would debate him, and that's their fault. They should be backing anybody but Biden. I don't think they will, but it's just how the cookie crumbles.
I don't know. I still think the Michelle Obama coming in would really shake up a lot of stuff.
Did you guys see that the odds on poly market for Biden getting swapped out jumped up to 30%?
Going up.
Yeah.
30%?
I think at last.
Yeah, 33, I think I saw.
Everybody knows it should happen, but I don't think it will. I just don't think they can, lift him from that spot. He's the most powerful person in the world right now. I just don't think they will, but they should. Everybody knows it.
I think they waited. I think they could have done it. I think they just waited too long. Is what they yeah. And they had a if it even if it broke, don't fix it. What's up?
My meme of the week is it's not really a meme. Well, someone should make a meme for it. OTM listeners, I'm commissioning a meme for this. Is that tweet about Biden? Like, I'm going to Camp David for 7 days and 7 nights to prepare. I thought of some biblical verse, and all I could stop thinking about was just him and Hunter at Camp David all weekend, with just like some crazy stories coming out of there. One last hurrah.
One last ride. My meme of the week is this tweet, which I think, and the fact that we didn't even really talk about Crypto Week this week is just telling about this current situation of that world right now. But this was a great tweet saying, maybe retail never showed up because all the market participants screamed it's all a scam going to zero. You must hyper gamble your way out of poverty on Fartcoin, the official coin of fart, a real fart built by farts for farts. And then the reply saying, yeah, telling the normie homies, we just gave up on DeFi and started scamming each other was definitely productive. And man, like, this is really how it is right now. Like, nobody believes the nihilism on crypto Twitter these days is just so sad. Like, and I feel it too. Like, last cycle, I truly believed in the tech, and then, the tech got dumped on me a few times. And I feel like a lot of people feel like that now. So now we're in this stage, and it's sad.
I think this is total sentiment. Like, I'd probably buy that.
Yeah, I'm definitely buying it too.
Yeah. What's the ticker for Fartcoin again?
Just the sentiment. I don't even like mess around with a lot of the meme coins, and I just basically am Bitcoin, Ethereum, and Solana. But like all the rest of it seems if you can't tell me what you do for your project simply, like, come reach out to me. I'll help you. I'll be your consultant to tell you what you do. Because the way most of these projects describe themselves, I'm like, what? Like, I get a headache, a migraine listening to that stuff sometimes. And I'm like, maybe you have to be deeper into crypto to really understand it. And like, there is a market for it. But like, if you're looking for adoption, let me help you like concoct a way to talk about this stuff. Mm-hmm. But I think that's the biggest barrier is actually communication.
This is why another reason this is very accurate. And my favorite thing in the next month is fade crypto natives. And the easiest way to do that, the most hated coin is ETH. and it's about to become the most favored coin in TradFi. So fade crypto,
Mm-hmm.
buy what TradFi is about to buy, and that's ETH. And I just dropped in the next one, which I just put it in the slide deck. I was dying at this. Crypto Bobby, Rob Payone, he's a great personality.
Oh yeah,
but someone, Murad's like, anyone consider buying real estate? I don't have a take on this thing, but Bobby's that people forget you can't live or raise kids in a meme coin. Just had me absolutely geeking.
It's so true. It's so true. Yeah, I agree, Quinn, with your take on. I think this is the time to get bullish on ETH. Like it just feels pretty. It needed a long time to get non-consensus. I'm still not sure if it's unconsensus. Like it definitely still is the ecosystem that I think has probably crypto owns the most of. But yeah, TradFi is about to buy it for sure.
Yeah. I thought Yano actually had a really great tweet, I think last week it was, where he was mentioning how when he's going to these conferences in real life, everybody's like actually believing in the tech and talking about it and a lot more optimistic. And then all these degen traders on crypto Twitter are just depressed and trading 5x leverage. Mike, have you been going to these same conferences too? Do you feel that same way?
All right, like no, I didn't go to that Coinbase conference that Yano went to. I don't know how. I don't feel like you can learn that much from these. I've been going to these conferences for like 7 years, and like honestly, you could copy paste a conversation that I had with like someone in Coinbase in 2018 and today, and they would say the same shit. They'd be like, yeah, it's really institutionalizing and professionalizing, and like, there's this example of some corporate that's coming. It's like, I'll believe it when I see it. Here, like I have a different perspective on this stuff, and my perspective is I actually think the tech is like better than it's ever been, and it's all converging around like a very similar design decision, and I'm actually really optimistic on that front. The other thing, and this dovetails with like a view that I have around media, is I kind of view Twitter in general as like a new cohort of people that think in a similar way. Like there's like the Fox cohort, there's the CNN cohort, and then there's this like new up and coming like crypto cohort. And I think that there's a huge overlap between crypto Twitter, like crypto in general, like as the industry, and like the rest of society. And I don't know. I actually have the opinion of, I talk to a lot of marketers in crypto who are like, my customer is people who aren't in crypto today. And I always tell them that you are not correct. Your customer is people who are in crypto today. Because if you run a network for decentralized compute, like good luck. You cost 10 times as much as AWS. No one is going to use you if they do not already belong in crypto, and there isn't some infrastructure reason in your protocol to use. Like my thought is that this eventually crypto just gets bigger and more normal, but it's its own sort of thing. And if you look at a lot of the use cases and apps that have worked in crypto, it really neatly fits with like Maker, Uniswap, Aave. It's solving problems for people that own crypto assets and are in the ecosystem. And every like TradFi, like, hey, I'm going to build a money market fund on a permissioned blockchain, just fade that 11 times out of 10.
That's
like,
what I'm talking.
Always.
I'm not talking. I'm too far away from the use case stuff in crypto. Like that makes sense to me. But like the people that are like you get these DMs on Twitter that are like, we're trying to solve the ninth circle of decentralized polychain math concentric circle adoption, and you're like, dude, what is that? Well, we're decentralizing our servers over in Australia.
But like just listen to your average like engineers, at Google, like get together and have beers. Like you wouldn't understand what they're talking about either. You're not meant to. You don't have to.
They're not reaching out to me. They're in their little pockets of like networks.
We need more Steve Jobs in the space and less Steve Wozniaks, because there's a lot of Steve Wozniaks. We need some Steve Jobs to articulate the value proposition.
Yeah.
Yeah, I think so too.
Ippolito for president.
No, thank you. But yeah, and I do think that media has a big part to play in this. Like I will say, the more that I look at, I've faded this for a long time, but traditional media, like broadcast media that you see on TV through Fox or CNN, is just so terrible. I view it as like really toxic and poisonous to your mind. Like I was just with my parents in Montana, and like they crank this stuff, and it's like this shit is horrible. It's unethical to produce. It's so negative and skewed and incorrect. Like, yeah, I just couldn't be more against it.
I turned on like the Austin local news, which is like, I don't know, Fox 5 or something like that. These syndicated shows or whatever. It's actually like, it makes me dumber. Like and I can't believe people still watch it. Like I don't think they do. I think the ratings are just dropping, especially with streaming. But like the whole dynamic of like mainstream television news to me is just, it's foreign at this point.
Have you guys heard of this concept called the crap trap?
No.
So I think what started this is that social media just won as a business model. So the crap trap is this idea in media and news where people actually want lowest common denominator content. And when you have money that gets sucked out of your revenue, you have to figure out a way to replace. So basically what's happened is like, you can look at this, there are these pie charts where you can see the amount of advertiser spend that publishers used to get was like 80% of spend, and now it's 20% of spend. And so if you're a publisher, you have to think, how do I like generate more views and audience so that I can sell my discounted commoditized ads to them? And the way that you do that is you sacrifice on the quality of the content and you go mainstream. And it's called the crap trap and the reason why it's a negative reinforcing loop is because the more you dilute the quality, the more you have to like, the more you sacrifice on the brand, and people aren't going to pay for the brand anymore. So the more you need to get views and the more diluted you need to go. And it's this like negative reinforcing cycle. This is what happened to BuzzFeed. So most media like is just stuck in this never ending shit cycle of the crap trap. And
you know what?
Why you brought me on? Is that why you brought me on?
That's exactly right.
Part of that too, Mike, is just like what happens when people follow data too much. So like in my previous career, I spent like 10 years in marketing, advertising, consulting on branding a lot. And a lot of what I talk about to clients is that if you just follow the data, you're going to become that common denominator. Like when we would talk about, audience segments or like your target consumer, it's like if you follow the data too much, you end up with somebody who's, they're a man and they're also half woman and they only have half an arm because when you take the whole sample size you end up with less than one arm or less than two arms or something like that. And if you just follow that data too far, you just get completely lost in it. And so a lot of these advertisers and brands will just follow and so it's like, let's keep optimizing click-through rates, let's keep optimizing like cost per impressions, and they just follow down that path until they get completely lost about what differentiates them. And I think that's what's so great now about like niche micro communities, and it's a big reason why I joined Blockworks, is that okay, we can start to build a more genuine community around niche interests. And I get that there has to be ads in these podcasts and stuff, but it's the other side of that of paying for it is just not, nobody wants to do that either. So there needs to be some sort of consideration for that. But overall, I think it's a hugely net positive, and it can allow these more niche communities to develop.
That's what I think is happening. I think that's the big trend in media. Like I basically think Barstool got it right in terms of like, that's what, if you want to look at the future of media, it looks closer to that than it's not going to be exactly like that, obviously. Like they built a pretty difficult business to recreate, but
Go Blockworks.
This was an original. This was the first sweatshirt that we ever made, and you can't see the B here, so everyone hated it. But now I save this, and it's like an original. It's like everyone says Lockworks.
Lockworks.
You might have one of these, Tyler. Actually, yeah. You might have the original cohorts.
Vintage.
Yeah,
put it on eBay.
Yeah, exactly.
Well, good stuff, guys. That was a great episode.
Yeah,
great fellas.
Everybody have a good weekend.
Have a good
Go
weekend.
East.
Go East.